is the DeFi Decoded podcast by 9 Point Partners. The ideas and opinions expressed in this podcast should not be taken as investment advice. Always consult with your financial advisor before investing.
Hello and welcome back to another episode of DeFi Decoded. I am Alex Tapscott here with Andrew Young. Andrew, it's nice to have you back. We missed you for the past week, and boy, what a week it has been. There has been a lot of news in the market, both in the world of crypto and also in the public markets where things are really heating up. Earlier this year, we wrote a lot about how we thought crypto IPO season was coming. You and I have had a lot of really interesting discussions around that point. The rationale is that you got a lot of companies that are late stage, profitable, should have gone public maybe the last cycle. Now you've got a window where the market is open for business and where the regulations have gone from headwinds to tailwinds. And we've got our first kind of taste of some of that. So we saw eToro earlier this year, which has done well, Fold. But the big one was Circle. This is the thing I think a lot of people were looking to see and to as for an indication to how the market is going to receive crypto names and what a reception it has been. The stock was originally supposed to be priced around $26, got increased to $31, so above the high end of the initial valuation range, which obviously the investment bankers mispriced this because the stock is now trading well above $100 per share just a few trading days after the launch. Has traded extraordinary volume and I think has really opened the floodgates for a lot more of these kinds of deals to come down the pipe. Gemini filed to go public on Friday of last week. That was like June 5th or 6th. And I think there are several others that are going to look at the capital markets as a way to raise capital to maybe get some people who have been in this thing for a long time, employees that have held stock for a decade or more, in the case of companies like, say, Kraken, some much needed liquidity. So what do you make of this? TradFi meets crypto. It seems like the marriage that was bound to happen, and so far it's been quite fruitful. What do you make of it all?
Yeah, it's interesting. It's like the continued institutionalization of crypto. And we're seeing that in the sense that most of the speculative liquidity this cycle seems to be centered entirely in the stock market, which historically it's been the opposite. So historically, like in 2017 and 2021, again, only two cycles, but you usually saw a lot more sort of speculative forces in the crypto cycle. You know, it's a classic Bitcoin altcoin cycle, and then what I always said was that TradFi was like the last kick at the can, typically in terms of where the speculative flows went. This cycle's been, again, very different. Bitcoin's obviously done really well, and besides the sort of 12 months of meme coin craziness, which overall was not that big in terms of like a total dollar amounts. It seems like it's really the TradFi market where most of the capital is being sort of deployed. Circle, obviously, I think the funny thing about Circle was that most crypto native people thought Circle was overvalued at $30.
Yeah.
So I would say the general sentiment was that Circle was not worth $10 billion. Like we were talking on this podcast, 2-3 weeks ago about how it was crazy that Ripple was thinking about doing, I think it was like a $13 or $15 billion, alleged rumored offer to buy out Circle. And now it's trading at what, like 30, almost
26 billion.
Yeah, 26 billion.
Yeah.
So I think, two things, obviously. One is everyone sees stablecoins as like the first breakout use case of crypto, or at least, the second after Bitcoin. I think that's pretty fair. You can't invest in Tether. It's obviously private. And so this is like Circle's really your best way to play the stablecoin thesis. It is kind of like the more regulated, more buttoned up of the two, at least in terms of perception as well. So I think it fits the market really well.
To me, it's sort of like, okay, I don't want to draw too many, so this is a comparison I've been thinking about. So the fervor in the stock market around Circle kind of reminds me of the dot-com era a little bit. And I mean that in a positive way. So you and I have talked at length about comparisons to history, and we've obviously done a lot of research. I mean, I was a a kid in the 90s. You were like barely born in the 90s. But this was a period in time when, new technology emerged, when there was a lot of excitement about it. There weren't many ways to play it publicly. Initially, it was companies like Cisco and Nortel that made infrastructure for the web that benefited. And then you got your first like high profile IPO, which was Netscape. And Netscape had this like massive debut, and it was a similar kind of thing where the stock increased, multiple, in a few days. And that was when people went, oh my goodness, this is really interesting. Weirdly, I almost think of like, Circle is kind of like the first .com company, like the first company that had a website, right? So if you think of like blockchains are the internet of value, and the web browser is sort of like the interface, then the websites that launch, Yahoo, Google, eBay, et cetera, are all kind of like the applications. The application layer in the web, at least in Web 1, were websites. The application layer in Web 2 were apps, and so that's where you saw, the Airbnb and Uber boom and so forth. And the apps here are, tokens, tokenization kind of initiatives. And so like stablecoins are an example of an application that leverages blockchain, just like a search engine is an application that leverages the web. And in the same way that, there was Yahoo and Google and several other search engines, with stablecoin issuers, there are several different stablecoin issuers. So it's almost like, to your point, it's like there was no way for like the public market investor to get exposure to kind of killer apps in Web3 if they were unwilling to own, crypto assets directly. And now we finally have one that's debuting in the market.
Yeah, I think that's a good comparison. I mean, I do think Circle is sort of unique. So I would disentangle sort of two things. One is I agree with you broadly. I think in the case of the sort of craziness around Circle, it's more tied to the specific economics of being a stablecoin company. They're truly just some of the best economics there is.
Yeah.
At least when you look at like Tether, I think has one of the highest average revenue per employees in the world.
Yeah.
It's some crazy number.
It is the highest. We looked it up.
It is the highest. Yeah.
It is the
highest. The economics of that are completely insane. And again, there's no real way to play stablecoins. There's Athena, but again, it's like crypto native and a lot smaller, and it's not I don't know. There's more risk involved with it. Whereas Circle is in a lot of ways like the most de-risked stablecoin, even though they've been losing market share a little bit over the last.
They're definitely the most de-risked because they're sizable, they're widely used, and they're not viewed as having kind of any regulatory stigma or anything like that, right?
I don't want to say de-risk regulatory wise, because they are losing a lot. They are losing market share. Everyone is coming out with their own stablecoins, right? Like PayPal has a stablecoin. A lot of the banks are talking about rolling out their own stablecoins. So I think there's going to be a lot more competition, but that way. And I think it's something like Coinbase gets like some crazy revenue share as well. It's because they started USDC with Circle. And so there's this there's essentially this revenue share agreement that's incredibly favorable towards Coinbase. I believe they also own a decent chunk of the equity as well. But I think it's more to do with that. I mean, the good example of this was yesterday. There was the launch of Plasma. So if people don't sort of follow crypto Twitter as much as I do, Plasma is essentially an L2 built for Tether.
Yeah.
And it's backed by the Tether team. There's actually a second one coming out as well, I believe called Stable. But anyways, that's sort of coming down the pipeline. And they opened, essentially what they're doing is, it's like in the crypto words, it's called a lock drop, effectively. So effectively what it means is like you deposit liquidity, and in return for depositing liquidity for some set period of time, I believe it was 12 months or 13 months, you get access to like essentially the token of this L2. Mm-hmm. So it's like almost like a quasi ICO, but instead of giving the money directly, you get the money back after 13 months, but they are able to use the liquidity that you provided to like bootstrap their ecosystem. And a lot of people, no one really knows what.
Let's pause on that because that sounds really interesting, but I'm not sure I totally get it. Right? So I put like $1 million into this thing, and it's locked for a period of time, and I get my money back. So then, how do they get to use the money to bootstrap it? Are they using interest on that to fund development, basically?
Yeah. So typically, the best example of this was actually Blast.
Okay.
Blast was a highly gamified L2 that came out almost exactly a year ago, 16 months ago. And they bootstrapped something like $1 billion in ETH. And essentially the idea there was that you lock up ETH, and it's an L2 where they stake all of the ETH that's locked up in this L2 and earn a yield on top of it and pass back the yield to the holders. And so they wanted to like bootstrap liquidity, I guess, to build legitimacy, and also just that there's like a bunch of ETH on the chain. So right away, it's sort of economic. There's a lot of issues with how they built it, but moral of the story is that they were able to bootstrap a ton of money because it's like you can think of it in the sense of like, if you own ETH, you're getting a yield on it from staking, and then you're also getting a yield in the form of like whatever tokens that are airdropped. The only problem there is typically, you lock it up for 6 to 12 months, and then the tokens, I think, typically vest over time. And, in the case of Blast, they weren't really able to keep the momentum going. So now the token's been sort of has been nuked a bit. But anyways, more of the story with Plasma is you lock Tether, and they initially had a $250 million deposit cap, and it was filled within 1 minute. So within 1 minute of opening this deposit cap, where people could, essentially put stablecoins and earn, and in the future earn, I guess it'd be XPL tokens or whatever.
Yeah.
It was filled within 1 minute. People were spending like $100,000 in gas just to get their deposit through, which makes sense if you're depositing like $10 million. That's like a 1% transaction cost. And if the yield is like 50% or 100%, like it makes sense. So, anyways, they ended up increasing it to $500 million, and I believe that also hit like shortly after. There's a lot of confusion though. People don't really know what they're exactly going to be using the stablecoins for. But it's backed by like the official Tether team. There's like a lot of people like the idea of like a stablecoin chain. I think it makes some sense in the sense that like, if you're using stablecoins on a day-to-day basis, it makes sense that you would like pay transaction costs and stuff in those stablecoins.
Yeah.
And I think, in a way, it's really just like it's the same way centralized exchanges all launch their own chains, like with BNB and whatnot. It makes sense, I guess, that stablecoins will just do the same thing too.
Well, a couple of things. Sorry, I do want to make a couple of observations. Number one, Circle hired a bunch of amazing blue chip investment banks, filed an S1, put together, this detailed presentation, went on a roadshow, met with probably dozens of institutional accounts, did major, conference calls with, retail brokerages and God knows what else. And they had a very successful debut. They raised $1.1 billion in their IPO, and the stock is up, 4x. But this thing, nobody really knows what the use of proceeds is. All they know is that it's Tether, and the thing raised $500 million in a few minutes or hours or whatever for something all on chain. To me, that's kind of there's a bit of an interesting duality to this, right? Like these are mirror transactions in a way. Like you've got one centralized stablecoin company going public, issuing stock on the market in a very traditional manner. Then you've got this other project launching on chain with a contract or whatever, where you lock up your money in exchange for some promissory note of getting some token down the road. And even in spite of all of the uncertainty with that, it was still able to gather all those assets, right? It's so interesting to me that there's, it's the trend in this cycle is not just that companies and assets are moving on to the market, onto the stock market, because that's where the capital formation is happening. It seems to be happening in both places, and it's very, very different examples, right?
Yeah, well, it actually fits really well, right? Because Circle is the more buttoned up version of a stablecoin, and so they went the institutional sort of public market route with a formal roadshow. And Tether is more, I would say, it's like to a certain extent more crypto native, or at least seen that way. And they have multiple L2s coming out with Tether as like the gas token and like effectively the main token of the chain. So, We'll see what happens. I mean, I think here's the thing. Almost certainly, we're going to see some. We're going to see like a Circle native, like a USDC native L2 as well.
Yeah, they should definitely do that.
Yeah, it's like pretty because it creates tons of TVL. You can bootstrap your own like DeFi ecosystem. There is like some interesting things you can do. But again, also all on Ethereum as L2s. Just sort of going back to our thesis about why everyone's going to use Ethereum, just because you can build out your own infrastructure. Yeah, I mean, I think I not really much more to say. I think a lot of this is around stablecoins, though. I mean, there's obviously we just saw the Ethereum treasury company that raised $525 million last week. With Joe Lubin and all that, like there's still a lot of speculative capital in the institutional markets, but it's not. I still think it's mostly tailored around Bitcoin, Ethereum, and to a certain extent stablecoins. Because like Coinbase is a good example. Coinbase I think it's down over the last 12 months, right? Like it's not. I could be wrong on that, but it's pretty much flat. Over the last 12 months, it's almost exactly flat. And it's actually pretty much flat for over the last 18 months since March of 2024. So it's not like all crypto stocks are getting bid up, without anyone looking at anything.
No, not at all. No. I mean, it's an interesting market as someone who is in the market, in the public market, because, I think that some of these companies, Robinhood, Coinbase, have done very well. Coinbase is still well below its all-time highs, though. You've got the miners, which are struggling a little bit. They've caught a bit of a bid here. I mean, how could they not? Bitcoin's at almost $110,000. But there was, for a time, a hope that miners could be both Bitcoin and AI plays because of the potential to convert into data centers for training and inference. And that has not quite materialized the way people thought. And so those names are below their highs. And beyond that, there's just a real dearth of public market opportunities. Of course, there are the treasury companies, which are worth discussing. MicroStrategy. We saw SharpLink, which launched recently to give investors exposure to ETH. They have many benefits over ETFs. They allow, the vehicle can stake 100% of their assets. For example, in the case of ETH, they can issue bonds to increase leverage and give other types of investors exposure. And if they trade at a premium, they can continue to raise capital and increase the asset base per share. So, increase the BTC per share, increase the ETH per share. And so those have done really well. But beyond that, there are not that many kind of operating companies, which is why I just think like Circle, it's like, oh my God, here's a real business. Stablecoins are the first killer app. We should definitely just like buy this at any price, I think is the thinking in the market. And I think that honestly, like anybody else who can get in the window quickly is going to benefit from that excitement and the sort of desire from a lot of investors to get exposure to the technology.
But I guess my question is, do you think this is going to flow down into the other subsectors of crypto? Or do you think this is just going to be like over the next 6 months, let's put on our forecasting hats. Over the next 6 months, do you think that's going to trickle down into the other sort of smaller subsections of crypto? Or do you think this is going to just be a continuation? Like 6 months from now, it's not that we have treasury companies for asset number 100. It's just that we have 100 different Bitcoin treasury companies.
That's an interesting question. So here's what I'll say. I think as the technology matures, there's more differentiation between companies and between technologies. So, Bitcoin maybe is benefiting at the expense of other chains when in previous cycles, everything kind of went up and down together. And in the public markets, as there are more quality operating companies, maybe those names benefit at the expense of companies that are public and offer you exposure, but maybe aren't necessarily well-run businesses. On the question of treasury companies, I don't know. I truly cannot predict how many more Bitcoin treasury companies the market can digest. Technically speaking, the trade is quite compelling if you're a new investor. So if all the peers are trading at 1.7 times NAV, or on average are trading, which is where they are, if you look at all Bitcoin treasury companies, someone comes to market offering the ability to invest at NAV, why wouldn't you do that? Like if you were an investor, it's like, okay, I can invest at NAV. My upside is that it trades at a premium. The base case is that I just have Bitcoin exposure. So I think you got to kind of want to have Bitcoin exposure, but it seems like a lot of people do. And the negative case would be that it trades down to a discount to NAV, which is always a possibility. We saw this with GBTC and ETH, the two Grayscale trusts. But there are aspects of the corpse which may allow them to defend that premium a little bit better. And also, the only reason they would ever need to be sellers of coins is to meet the demands of the convert holders, which I don't know every single node across every company, but I think those are like a few years down the road, like in terms of their term. So I don't think this is imminent, and so I think the trade can keep going longer than we think.
Yeah, which is super interesting. I mean, I think again, TradFi historically has been has been sort of like an add-on sort of. They come in at the very end, like the blow-off top signal is when you start to see a bunch of, public market shenanigans. Maybe this is also, I mean, we don't know, right? Maybe this is just like we're in the blow-off top part of the cycle. Like the next 6 months, we see even more sort of crypto TradFi stuff, and this actually just represents the final 6 months of this like iteration of the crypto bull market. That's also very, very possible. I mean, if you're looking at history, this would be kind of the sign, I guess. I do think there's something like fundamentally different about this cycle, just in terms of, there's just like way more institutionalization of crypto. I mean, I guess you could say that about the last 3 cycles as well, but
I think that's true. I mean, it's a pattern that keeps going, and I'll give you a kind of really interesting example of that, which is that, my colleague Jake Moody is tired of me saying this, but it's true that there have been regulatory headwinds. Initially, the governments and regulators were kind of indifferent, and then they were hostile towards this technology. And sometimes they had a good reason, like FTX blew up and there was all this shenanigans in the last cycle. It's like, how else can you feel about it? But now we're in this environment where there's an administration that has a pretty clear focus and has prioritized this technology as being core to their innovation agenda. And I think that is really meaningful. So the new chairman of the SEC, Paul Atkins, who's by no means some kind of radical. Like, he is very much like a product of the DC establishment, gave this amazing and revealing speech yesterday at this event. And the event was called DeFi and the American Spirit, which was like, what an interesting title. So he says in the speech, this is an apt title because the American values of economic liberty, private property rights, and innovation are in the DNA of DeFi, or decentralized finance. And he goes on to talk about how voluntary participation in proof of work or proof of stake networks, whether as a miner, validator, or staking as a service provider, is not within the scope of federal securities laws. And that's a pretty clear line in the sand, because previously the thinking was, and basically anybody who touches crypto, if you're running a validator node for some blockchain, that you're acting as a broker dealer or something, would have been completely crippling for making the technology scale. Because everyone would have had to get licensed, and that would have been just incredibly expensive, right? And limiting. So we're in this kind of really interesting period where, there's all the Trump bluster and nonsense, but beneath that, there's these people who are kind of thoughtful and working hard to create rules of the road here that will allow the technology to scale. And not like in an unregulated way, but in a regulated way that hopefully is sensible and balances priorities of investor protection and innovation. And so my point is only that, like, if that comes into effect, then that could allow the market to run a lot longer, because now you've got in my opinion, a way firmer footing, a way clearer regulatory regime that can allow businesses to invest, assets to come on chain, more companies to go public, more ETFs to launch, more corporate adoption of the technology, and so on and so forth. And I think like those fundamental drivers are the thing that can sustain, a bull market crypto longer than longer than just hype alone, right?
No, I think it's a good point. I mean, I think like at a certain point, crypto gets big enough that it just becomes there's no like crazy speculative cycles anymore, because it just is a part of the economy that just kind of grows at the same sort of speed. I think one of the charts that was really interesting was, we should get it up maybe on the show notes or something, but it's essentially a chart showing the price of Bitcoin from sort of the bottom to like across different market cycles.
Yeah.
And when you comparing to 2013, 2017, and 2021, and then obviously this market. And what's interesting is that Bitcoin's up way less than those other cycles, like in terms of days since it bottomed. But there's been way less volatility. Like there's not been nearly as many, harsh drawdowns. It's been a relatively steady climb up, at least again compared to other cycles. And so, maybe the 4-year, global liquidity crypto cycle is sort of a thing of the past, and we're now in this sort of like slow structural uptrend. That's also kind of like a very, at least for Bitcoin, that makes sense to me. I don't know. I do think it is interesting though how concentrated this market cycle has been though. I would say that's like the number one most surprising aspect of this cycle compared to the last 2 cycles. And I mean, in a lot of ways, it kind of just reflects the broader economy. Like the overall stock market has been incredibly concentrated in terms of, if you strip out Mag 7 over the last 3 years, it's barely up. So maybe it's just kind of the same thing where there's just a couple huge winners. In this case, like Bitcoin and again, like we said, meme coins to a certain extent, and then like the stablecoin issuers and essentially things that are derivatives of Bitcoin, like treasury companies. I mean, one thing that was it's also surprising is Solana has been the best performing L1 of this market cycle by far. And it's not even back to its all-time highs. Like it's still 40% below its all-time highs in 2021. Like briefly touched, it briefly touched those like all-time highs and then has slowly fallen. I think a lot of that is due to hyperliquid, which we've talked about on this podcast a bunch as well. But I mean, I think it's interesting. We'll see. I mean, I think some of the really big things that if people are listening to this and interested about crypto investing implications and things like that, there's Pump.Fun, which is like the number one token launchpad in the world. Essentially was like the main company behind this meme coin craze. Yeah. They just raised $1 billion at a $4 billion valuation.
That's crazy.
For an upcoming ICO. And most people thought that was kind of crazy. I mean, again, very different, very polarizing. So some people are just like, that's crazy because meme coin craze seems to be kind of over to a certain extent. No, I wouldn't say over, but it's definitely sort of declining. There's also a lot more competition. There's like 3 to 5 other like major Pump.Fun sort of launch pads.
Really?
The biggest one is this thing called Believe. And it's like, it gives coin creators more flexibility. There's another one called Virtuals, which is sort of a coin launchpad, but it's more for like AI agents, which seems kind of cool. But anyways, because like in some ways, I think they made like $700 million in the last 12 months. So, on a PE basis, 4 billion is pretty low. But at the same time, like meme coin volumes are down 80%, right? So it's like, I don't know. That's kind of the same argument people had with Circle though, right? Like it was a business that does, it does print money, but its market share is kind of consistently decreasing and there's more and more competition. And then people were sort of skeptical about it. And then, 25 times oversubscribed and the stock's up 4x from the IPO price. So I think there's a lot more, I think there's a lot more capital in the system ready to go. And people are kind of just waiting for the other shoe to drop. And that's maybe when we get this like full blown melt up phase, if we're not sort of already there now.
Yeah. Well, it's going to be very interesting, as we like to say. I mean, I think that I'll be convinced that we're in a prolonged bull market when we see more of the crypto assets start to hit all-time highs. Like I mean, unless we're in this really new paradigm where Bitcoin will do well and corporations that use blockchains to make money do well, but some of these other platforms struggle. I don't know. I don't think that's I've never envisioned that, so maybe I need to reassess my priors. But I think that we're still a ways away from the moment when we see the speculative money really start to flood into the asset class. That's my gut. I don't know if you have any thoughts.
There's some early signs that things are turning. So, for example, Aave, which is like the largest decentralized lending protocol in the world, over the last 12 months, they've grown their TVL by 4x. They went from $10 billion to $40 billion, which is actually now a new all-time high. So, they're also making quite a bit of revenue nowadays as well, instead of like in the past market cycles when they were sort of subsidizing revenue. You also have things like MakerDAO, or I should call them Sky Money. I think that's what they rebranded to. They're making 9 figures a year in protocol earnings. So there is like I would say there's a lot of green shoots on the fundamental side. The market hasn't really given these things too much credit yet. I say that, and today MakerDAO is up like 20%, and I think Aave is also up. Aave is also up 19%. So maybe today is actually like when things are starting to come up. But it's interesting. I think like it's still down. Aave is a good example. It's still down 50% from its all-time high. Which is $600. It's currently at $310. Even though like TVL is 30% higher, the economics are way better. So there is a lot of, this might be one of those things where we're kind of like, I wonder why DeFi hasn't caught up. And then over the next 3 months, DeFi just catches up. And we're saying, okay, that actually made a lot of sense. Like, I think that it could be one of those things where we're kind of like, a lot of these things we're sort of pointing to and being like, this is very confusing. I think historically in crypto, I think we ascribe a lot of like market efficiency to the crypto market because you're in the TradFi market. I wouldn't say the TradFi market's efficient, but it's somewhat more efficient than the crypto market. And so I think a lot of the times, like things that don't really make sense in the crypto market end up correcting. And then, you wish you bought more kind of thing. But
so here's what I will say, just like on the Bitcoin dominance side. So, Bitcoin dominance was obviously used to be very high. And then after the 2018-19 crash, it hit a high of 71%. And then during the bull market in 2020 into 21, it got as low as 40%, right? So 60% of the total market value of crypto were other projects and protocols and so forth. Today, it is at 64.22%. So it is actually not far off from where it was at previous periods where the market was bearish. And so I don't know, someone's probably done more analysis on this than I have, but I don't recall, in a scenario where Bitcoin is at an all-time high and also where Bitcoin dominance was nearing local highs. I feel like that is a unique thing. So that's either the most bullish thing ever for the rest of the crypto complex, or maybe it means this time really is different.
Yeah.
Not sure.
I'm not sure either. It's one of those things where, again, it might be one of those things where 6 months from now, this market plays out kind of like other markets, and we should have had more conviction in history repeating.
I feel like we're pretty long. Do we not have enough conviction? Anyway, yeah.
No. I'm saying conviction in terms of like, altcoin always, like the altcoin season eventually comes. The broad-based rallies, like all that type of stuff. So like, I do think one other kind of small addendum to our previous conversation. I do think there's going to be a lot of sort of TradFi issues coming to the market over the next 3 to 6 months, just based on how many sort of calls and things I've gotten in the last week based on Circle's success. Like a lot of people sort of saw Circle, they saw MicroStrategy. Okay, maybe that's just Bitcoin, and maybe that's just that's just like a Bitcoin phenomenon, a MicroStrategy phenomenon. And then I think like SharpLink was a really big moment because a lot of people are like, oh wow, there's a lot of demand for these things beyond Bitcoin. It traded up 2,000% within a month. And then finally Circle was, okay, wow, there's even like 25 times oversubscribed. This company that like some people were a little bit bearish on up 4x from its IPO.
Yeah.
I think now, like kind of bringing back to what you said at the start, like there's going to be a huge rush to get public in the next 3 to 6 months. So we should see a ton of companies going public, I would say.
Yeah.
So, and again, that's also historically why I think TradFi, when you see a ton of supply in terms of like either whether it's tokens or stock hitting the market, that soaks up a ton of capital, and that can kind of spell the end of the market cycle. And so that's why like the crypto cycle, because of its inherent sort of hype cycle, there's not enough things liquid, tons of demand. So the things that are liquid go crazy, and then there's like a lag, and then everyone tries to go public, and then there's a huge supply that hits the market right as demand's starting to sort of falter a little bit. So I do think we're lining up pretty well for that sort of speculative boom and bust. I do think like the next 6 months are going to be pretty. I'm pretty bullish. So
we have to go, but I want to just say one final thing to what you said, which is that like this is not a zero sum game. It's not like one IPO takes away demand for the next IPO. If anything, it's reflexive, right, Andrew? Like where if there's a public company that comes to the market like Circle and it does really well, that takes more money off the sidelines who would have not participated in a crypto deal and buys the next one, which could bring more money off the sideline to buy the next one, right? Eventually, you're right. It does. All things go through cycles, but this is one of those areas where it's not like, oh, there's no more crypto money. There's no more money to invest in crypto companies because there's some fixed supply. If anything, that supply can grow many, many times if there's success investing in quality businesses that like do incredibly well in the stock market. So that's what that's my thought.
Yeah, I'm talking more about the treasury companies. I think the treasury companies.
Oh, the treasury companies. Yeah.
Yeah.
Well, we'll see about that. That's a harder one to predict, in my opinion.
Yeah, also it is very reflexive though in the short term, 100%, right? Like if you have more Bitcoin treasury companies, you have way more capital going into Bitcoin. Price of Bitcoin goes up, Bitcoin treasury companies go up. There is a big reflexive loop.
Yeah.
One thing that's very different about this cycle, I just really want to hammer this home. Typically we see the crazy, really, really like blatantly stupid stuff in terms of like meme coins at the very end of the cycle. Like this cycle is very unique in the sense that like we kind of got that out of our system early. Unless we're going to see like one of the biggest meme coin surges of all time, surpassing what we saw last year. Maybe that is actually like the final leg of this bull market. I guess if you're buying the Pump.Fun ICO, that's essentially what you're betting, right? Like your crypto market stays hot, meme coins are like kind of the final leg, or maybe like get a huge rally. I guess the last cycle was kind of similar because NFTs peaked about 6 months before most of the majors actually peaked. So I guess there's some parallels there, but I don't know. We'll see. It does seem like we kind of got over the crazy speculative part first.
I think that's a really interesting observation. And now it's like we're buying. It's like we're buying publicly listed companies that are profitable. Great, sounds good to me.
Some of the most profitable businesses of all time.
Well, I mean, in the case of Tether, yeah, that's true.
Circle's number 2. So
Circle's very profitable too. All right, well, that's great chat, Andrew. So enjoy the rest of your time wherever you may be, and we will touch base when you're back in town. And everyone, thanks for joining us today. That's it for this week's episode of DeFi Decoded. I am Alex Tapscott. We will see you next time. Oh yeah, don't forget to please like, share, and comment wherever you listen to your podcasts, and subscribe to the 9 Point Partners YouTube channel. It helps other people find it and helps us to reach a bigger audience. So thank you very much, and we'll see you next time. Take care.
The information contained herein does not constitute an offer or solicitation by anyone in the United States or in any other jurisdiction in which such an offer or solicitation is not authorized, or to any person to whom it is unlawful to make such an offer or solicitation. Prospective investors who are not residents in Canada should contact their financial advisor to determine whether securities of the funds may be lawfully sold in their jurisdiction.